Go Crypto Investing, and this is going to be a multifaceted update as I'm your blockchain technology and cryptocurrency breaking news and coin update headquarters as we work our way into a cashless system in a digital era and revolution that is taking over the world by storm and spreading like a virus, country by country, province by province, county by county, city by city, state by state, hemisphere by hemisphere. And that's why you hit that bell notification. Very important. Absolutely one of the most important things you can do is hit that subscribe button. Comment down below on the things you want to hear me talk about on here. The questions, the comments, the concerns, and answers that you have. Comment down below. Pound on that like button so we can spread our message of an inflationary depression that is well underway now, that we've been harping about and talking about for almost 2 years now on this channel, VINCENZO'S Crypto Investing. And if you're not subscribed, if you don't hit that like button, you won't be informed on all the breaking news and channel news and information and education, most importantly, that I put out here to inform and educate the retail trader and the average American and the average person worldwide to keep them out ahead of what's going on in the stock market, the gold and silver bullion market, the equity market, the laws, the monetary and fiscal policies that drive this nation and other worlds or other countries, Europe, China, Japan, United States, Australia, Canada, Mexico, South America, Italy, Greece, and all the rest of it, the monetary and fiscal policies of the central banks and the local and regional governments dictate everything. And that's what I'm here to do, to keep you out ahead of all the news as we are fastly moving into this inflationary depression, as we're already in a recession, but they're changing the definition of recession on the fly to try to trick the average retail person and trader and investor that we're not in a recession in the United States, that globally we're not slowing down, when globally we're slowing down. Globally prices are rising. Globally the standard of living is decreasing. Globally the savings of the citizens being depleted. Countries are going bankrupt. Insolvency crises are happening, right? And it's all very important, and that's what old VINCENZO'S here to do, to cover this. And in today's episode, we're going to start by looking at some headlines. You can see job growth pools in September, which could help fight inflation, which is the NPR is wrong there. Just because the job growth is being cut down and slowing down does not mean inflation slows down, because you're having artificial stimulus from the government, the United States, and around the world that is helping increase supply or increase demand while supply continues to go down, right? The productivity of the world in the United States is going down as demand is increasing, as regulations and regulatory things are tightening. Products that can get out there, oil is being stuck dry by regulation, right? So that is not necessarily the case that just because job growth goes down, inflation goes down. That's not exactly how that works. It has to do with the expansion of the money supply by the United States government and central banks. When they expand the money supply, expanding means inflation. The more money there is, the effect of that is prices rise. When you print money and stamp products, consumer goods, out of the market, that's making an artificial increase in demand. But you're not making up for that with supply by building more products, producing more goods, having more oil, right? You're depleting the product. You're not making up for the higher demand, the artificial higher demand by stimulus and low interest rates, and that creates inflation. When you create more money and expand the money supply, by default, by definition, you've just created inflation. The more money there is, the more goods can be bought. A simple analogy: if the U.S. government today gives every citizen, 360 plus million citizens, $1 million, guess what? $1 million is going to be the new $10,000. It'll have the same purchasing power as what $10,000 does today if they give everybody $1 million, right? Because they use that $1 million to to buy the same amount of goods there was the day before, hence having product shortages and price rises. It's an effect. When the government prints money, the effect of that, when they expand the money supply, the effect of central banks expanding the money supply, the effect is price rises. It's not greedy corporations. It's the propaganda from government to try to hide the fact that they are the single biggest cause of inflation, because they are the only ones that can create money. Central banks and governments that beg the central banks to monetize their printing and subsidies and programs, they are the ones that create inflation by expanding the money supply, not greedy corporations or businesses that, as the effect of the government expanding the money supply, they must raise prices to stay profitable, or they go out of business and the products that we need become less and less available if that company goes out of business, and that would make the prices going up even more because there's less product and consumer goods that the consumers need to live on a daily basis, hence prices would go up. All as the effect of governments expanding the money supply. So don't buy into the propaganda that central banks and governments spread, that it's greedy corporations, the Dianne Feinstein, the Joe Biden, the Kamala Harrises of the world, the Justin Trudeau, and the rest of these scumbags and charlatans and fleeceheisters and shysters on both sides of the aisle that hide the fact that the government, are expanding the money supply, central banks creating inflation, and the effect of that are prices rising. But they know a dumbed-down population with an onslaught of propaganda by the mainstream media and corporate media that buy and pay the politicians, right? They know the onslaught of propaganda on social media, on CNBC, commercials, radio, news, celebrities, sports figures, and whatnot. It's just too powerful for the average retail trader and the average man, woman, and child that they just buy into the propaganda. They don't have that critical thinking, and they just can't see past what's actually going on. And as we look at some of the things that are going on in the news that I have for you as I'm traveling, so updates are kind of hard, and you're going to get more of rambling and rant today, the technical analysis. You can see the United States inflation rate from 1990 to 2020. Doesn't even show the 70s inflation and stagflation and the 80s hyperinflation nearly. But you can see we had a 20-year period, almost a 30-year period of low inflation right after the 80s when the Federal Reserve and Paul Volcker put the hammer down on inflation. You can see we had 20 to 30 years of low inflation. And now, since COVID, we're having rapid rise in inflation that is not going to stop in the next 3 to 5 years, as the central banks and the Fed says. It's going to keep going. And you can see we went from nearly very low inflation of less than 2% to, in the last 2 years, 5% to now north of 8%, right? Real inflation is probably 15 or 16% if we still measured inflation like we did back in the 1970s, although they've changed inflation the way they measure it to try to hide the inflation, because the more inflation there is, the worse it is for governments and the harder it is for them to keep the status quo on what they're doing, right? Unless they use propaganda and manipulate the numbers to make an 8.25% inflation that we have now in the United States. That's bad. But if they showed the way they calculated inflation back in 1980, we would have about a 16% inflation, which is much, much, much worse. It would cause much, much more panic, and things would have to be done. You can see rental prices have skyrocketed. And this chart only goes to May 2021, and it was skyrocketing. The higher the number, the higher the price, right? The lower the number, the more affordable it is, and you can see it skyrocketing. You can see CPI, owner's equivalent rent, skyrocketing. This one goes to 2021, skyrocketing. Natural home price index, skyrocketing, and owner's equivalent rent. You can see the disparity, and the owner's equivalent rent is what they go a homeowner and say, what would you charge yourself in rent in green? And look at the big divergence between the home chiller index, the actual prices of home prices, right, versus owner's equivalent rent, which is a flawed government system just to manipulate the numbers. You can see they're at 170 when the real home prices and the real rent is up at 230, much, much higher, much, much more unaffordable. And this catastrophe is what's unfolding, as old Vincenzo's been warning of an inflationary depression, and we are hot on the trails of that. And you need to understand what you have to do in an inflationary depression, risk assets go down, cryptos go down because they are an extension of the most riskiest assets of them all, are the cryptocurrencies. Yes, they have big upsides and big swings, but they are the biggest risk, so they take the hardest hit in an inflationary depression, right? And you can see monthly gas prices from January of 2022 nearing an all-time high, and from January to where we are now in fall, I believe we did hit an all-time high before they started to level off briefly, but now it's starting to rise again. And this is only going to get worse. The interest rates are rising. The 10-year Treasury is up near 4%. As you can see, if we go into the gold and silver stocks, you can see the dollar, after it had a nice consolidation, which was what looks like to be a bullish consolidation, is now back to the upside and now back cruising and soaring like an eagle. Fly like an eagle, right? But if we go look at 10-year Treasury, if I can find this for you real quick, where's my 10-year Treasury at? 10-year Treasury, 3.86% is the 10-year Treasury. And just take a look at what we got going on for you. If we zoom out to the monthly time frame in the 10-year Treasury, see that? Look what we got up there. We made this. Old Vincenzo put this out. It made a bold prediction that almost nobody but a few people were saying. And in the crypto sphere, I was the only one that put that. I put this up in May or June of 2021, right? Next couple of years, 6/6/2020. See, I dated this. So it's over a year ago. 10-year government bonds, manipulated since 1980. If you look at what's been going on since 1980, you can see that's when Paul Volcker and the United States had to fight inflation, and you can see that up there. We were up near 17-18%. Holy spook. As we're running into some massive traffic here. We're going to put our emergency flashes on so they know behind us that traffic is coming to a screeching halt. But you can see we had a major downturn in government interest rates that have been suppressed since 1980, coming out of the 1980, when they suppressed them very low, right? And they've been manipulating them and killing them lower and lower. Every time they try to raise them, they can only raise so much. You can see back here in 1987, they started raising them. Then they collapsed them. Then they raised them a little bit. Then they collapsed them lower. Then they raised them a little bit. Then they collapsed, raised. They've been forcing them down and manipulating them down for 30 years, right? Old Vincenzo came online last year when interest rates were down here. Down there at about below 2%, near all-time lows. And we put this forecast of these upper resistances that you would hit and where we thought this was going to eventually go. Manipulated since 1980. With interest rates as hyperinflation started to take over in 1980, right? Get out of there. And everybody knows that we're done here now. I expect prices to move up here on a huge move over the next couple of years. And we have it at 9.5%, nearly 10% is what Vincenzo was calling a catastrophe in the making. And you can see now we're nearly 4%. We're up 300 to 500% in interest rates since old Vincenzo started talking about this. 6/6. Move that off of here. 6/6/2021. We made that forecast, and interest rates are eventually going to come up to that 10.26% unless the government reverses course, unless the government starts lowering interest rates, unless the government starts massively manipulating the currency market again by printing, by lowering interest rates and fiscal stimulating and doing quantitative infinity and throwing the United States dollar into hyperinflation. They're going to have to bring interest rates north to nearly 10% to get it over what the inflation rate is of 8.6% right now. They're going to have to get that over 8.6%, and they're going to have to drive that up to nearly 10% to be positive real rates of return, to drive down interest or to drive down inflation, as that's the only way to drive down the key. The only way to drive down inflation, get your notepads out, turn your hearing aids up, and get your reading glasses out. The only way to truly dive down and slaughter and kill inflation is to get the real rate of interest over inflation. So if you have 8.6% inflation, you got to have at least 10% real rates of interest on real rates of return to get people to invest and savings bonds and whatnot. Not a negative interest rate where we're at 3.8% interest in a 10-year treasury, but you got 8.2% inflation. 8.2% minus 3.8% is a negative 5.25% real rate of return if you lock your money up on a 10-year treasury, and no sane person is going to do that at a negative interest rate. You can see the price of gold has come down, and we went over gold. You have a 1268 major support level on the 200-day moving average, and you got a 2019 major upper resistance on a pattern breakout. You could come all the way up to $3,500 over the next couple of years, or you could come all the way down to $1,450 in a major bullish or bearish correction, right? The price of silver. You may hit the major support level on the 200-day moving average, right, at $20 and change. You're up at major upper resistance. You can see you bounced off the 6.18 Fibonacci golden retracement, and you're looking at a major upper resistance at $21, and then another major upper resistance at $23, and then the previous run-up high in 2020 of about $30, right? Like, subscribe, and share Vincenzo's Gold Crypto Investing. Peace and love to my beautiful audience.